Hello guys, I'm happy to be back. Thank you for joining the live stream. As usual on Monday, a live trading room from The5ers trading room. So happy to be back. It was already 2 months. I was not here. Maybe some of you guys knows why I was absent. But yeah, it was for an happy reason. So again, I will be happy to discuss with you about that. And yeah, first of all, let me know, guys, how are you today? How do you feel? It's been a long time, so I would be happy to get some of your feedback, guys. Hi, Thomas, how are you? On my side, I'm going well. I'm going well. Hola a todos, Ferdinand. Hi, Yonut. Hi, everyone. Happy to see you. Just would like to connect. Okay. Coffee time, guys. Coffee time. Well, let's wait a few more minutes before we start. I think you probably know, guys, what we're going to talk about today. It's been something it's been quite a long time. I've been focusing on the Japanese yen. Again, for me, this is the type of opportunity we see very rarely, very occasionally, not on a day trade basis because it's like a long-term perspective. But again, I think the trade that you can make the most profit and the most return are the trade that you can hold for a few years. And I think the yen is a good short for that time. We're going to talk about it. But let's wait a few more minutes than that other people join us. Meanwhile, I will just give you a short update. We have the Black Friday is on Friday. On this Friday, we ran a new discount on our programs for any hyper growth or 250K bootcamp. You get a free bootcamp program. So that's a nice plan that you guys can go for. And yeah, I hope this can get you are going to get some incentive to trade the bootcamp. For me, it's still the best program for a trader that want to learn how to be consistent in the long term. I still believe the bootcamp is the best because you need to learn how to be consistent. 3 steps which require some discipline, and when you trade other programs or a personal account, you don't have the discipline that you can get on the bootcamp. So yeah, it's a nice plan. If you guys didn't look and didn't check that, you can go on our website. Everything is written. So yeah, that's a nice point. Yeah, talking back to the last 1 month and a half already. I'm not a dad, guys, so that's why I was not here for 1 month and a half. I needed to take some free time. I was still working from home, managing the trade, the trading desk and the risk from home, but I needed to be with my little kid. You are not being a dad for the first time, multiple times in your life. It's happened one time, so if you can take at least this time, I was happy that I could take it, and it was a very, very nice experience. So I was a little bit aside from the market, like from a day trade, like from a daily routine basis, but I still look at the market, in the long-term perspective, which is part of my life. So I had to see what's going on every week, but not every day, for example. Yeah, Russell, that's a nice point. I didn't think about it, but let's read together. The dollar yen could be a good short, but also the dollar Mexican is also looking good, and the dollar Mexican has a positive swap. The dollar yen has a negative swap. So longer term trade are losing the swap rate with dollar Mexican. I agree. The fact is that I don't know about the Mexican economy. It's not like into the top 10 best economy like the yen. but it might be more risky to go short on dollar Mexican. I did not look at the chart, but from a fundamental understanding, Mexico against Japan, you understand very quickly what the difference in the economy. So you need to be careful about that. Of course, you have a positive swap, which can be an incentive to go on the trade. So of course, when you go for the long-term trade like that, you don't need to get leverage, or the leverage you should take is very, very small, because you don't want to get washed out from the trade. You want to still be in if the trade goes against you 3 or 4%. So this is why you need to take good consideration regarding the risk you are ready to take there. Of course, don't go with a 1 to 50 leverage. That totally makes sense. Welcome. Okay, let's move to the chart. I don't know if you remember, guys, as well, before I move into daddy vacation, we can call it like that. We were in a challenge, me against Alex. We started from a 20K account, which is the hypergrowth. I almost finish the evaluation, which is 10%. I'm here around 8% profit on this account. But as you know, guys, I stopped trading on a daily basis, so I put this account away. I found this account away for the few months. So this was interesting. I'm going to continue very, very soon. I need to be in touch better with the market before I return, but I'm still being comfortable. I trade very well before I move to daddy holiday, as we can say. And yeah, let's talk about dollar yen. The first thing we need to identify, and this is generally the way I look the market every time, is how far the market, or fast, I would say, how fast the market is moving into one direction. Okay, basically, when you identify the two different periods, here is the weekly chart. So you have already a few years time frame. You see the difference when you get into the from 2017 into 2021, the difference, the weekly difference in one candlestick, okay, is very narrow compared to what we have from 2022. And here you can see that the change and the variation we have in 1 week is very different from here. You can analyze it from a data point and understand what is the volatility that we have here. But already with our eyes, we can understand what's going on. Okay, and again, like I said, how fast the market is going into one direction. The market from May 2022 reached a peak of 30% in a matter of how much time it was. So it was you start in March 2022, and then it's October 2022. So in less than a year, the yen has depreciated from 30%. Then the market reject, and then again make a pullback, coming back into this zone, which is a very interesting zone. And for me, here comes the opportunity. You already had some opportunity to go here. Again, it was very difficult to find a good sell here. You don't know when the market will stop. But here we are, again, in a very, very good zone to take some sell in the dollar yen. This is, for me, an opportunity that you can have in a decade in the way I see the things. Of course, you need to be very, very patient because the market can still fluctuate into this zone. It can go against. You see, we are moving back into 1980 here, which I was not born, So the more you have data on the left side and the time frame you have, the more the retrace can be big. So of course, you need to be very, very patient. I'm not here talking about daily chart. I'm here talking about years of positioning. I know that already some banks and some institutions, I found on Twitter a very interesting thread that a bank already get short in the dollar yen. Of course, we can analyze the daily chart. I think this is more interesting you guys because most of you are day traders, but we probably break a clear trend line that the market was successfully holding, and we break it last week. The yen get stronger of 2% from last week. So we had this uptrend channel. This was the mean, if we can identify it like this. You had the peak of October 2022, which is this big zone. Okay, I don't like to draw a line because I think there is no sense to draw a line. You need to have a zone rather than a line, because the line can generally go above, go lower, take liquidity, moving back. So this is why I better prefer to look at the zone. And we see clearly that the market break successfully this zone, this demand as well. Here the market can retrace a little bit, but again, I think the trend on the downside are started. Okay. Also, if you see on the daily, we are the lowest bands, so the market can go back around the average. The average may be around that area. You see the average is here right now. So we can expect the market moving back to this zone and then continue on the downside. Okay. Again, you need to be careful with that. It's a long-term strategy. You don't need to be over leverage. Some people will be looking here for 1 to 100 risk reward, which is unbelievable. I don't understand how people can actually look at this type of risk reward. Again, I'm extrapolate here, but some people said I'm looking for 1 to 10 risk reward, which still it's a very, very big risk reward that most of the time you will get touched by the stop loss. So again, like I said here, that the market can retrace. On the H1, we are already overextended on the downside. The market here is pushing actually on the 15-minute chart. It's going to get to the next zone and then continue on the downside. This is what I think. Next zone would be probably 145, 144, this zone. This is a clear target. And then we're going to see what's going to happen here. But again, what I think here is that the market will probably in the next few months getting back to the 130 level. Japan is a strong economy. I think the interest rate there was negative. They want to switch it into positive or at least a neutral. There is high inflation, very big inflation in Japan, but they have an economy. They have central banks that can, takes important decision regarding the Japanese yen currency. So yeah, we have here all the elements that the market can at least getting down from the top. That makes total sense for me. So again, this is why I believe the dollar yen is a decade opportunity, because you need to have at least at least 3-4 years of holding. So it's more like an investment. If you have guys an investment portfolio, this should be one asset that you should hold would be the Japanese yen. You need to hold Japanese yen, for example. So I think you can buy the Japanese yen index maybe, or just sell the dollar yen. Okay, that can be the two solutions. I won't go into options because here you need to identify a time frame when you believe the market will go down. So we won't talk about options, but there is high probability that the market will go down for the yen. Regarding the question of Felix, again, this is a nice question. Do you use stochastics crossover mainly for overbought, oversold, or do you wait for mainline to cross back? Okay, that's a nice question. I'm not looking for overs. Of course, if the stochastics is above 80, this is an indication for me that I should not buy because the market is on a overbuy. Okay, so for example, here, this was sure that in the weekly chart, I would not be looking for a buy, but I would be only looking for sell opportunity. I will be looking for an indication to enter a trade only when the two lines will start crossing. Okay, so here you see that the market is already making a circle, like the moving average on the stochastics are starting to cross, which means I would be looking for this exact, exactly this cross here that I can identify a sell. Okay, and of course you need to identify and to apply different indicators. Okay, you don't need to look at only stochastics, but I'm looking at the Bollinger Bands. We need to be above the average. For example, here I want to have a sell. Stochastics is a green light because starting to cross, we are above 80. Here we are at the top of the Bollinger Bands, very close from the average. We need to be at the top. Okay, we need to be far from the mean, which is here, and we need to be on a big supply zone or support zone, whatever. Here we have, for me, all the indication that on the weekly, here on the monthly, not yet. You see here the monthly we are not crossing above, but on the weekly we have already the signal here that we can at least hold the trade and manage it properly. Okay. It's like what we had here. You see, for example, on the weekly chart, here you had stochastics coming below 20, so it's oversold, starting to cross below 20. We are at the bottom of the Bollinger Bands. It was a clear entry, and of course, you have this demand on the left side. So you have like the three green light that you can open a buy position for that one. Okay, so this is how I used stochastics combination with Bollinger Bands, and as well supply, demand, trend line, whatever it is. Okay, any price action understanding. So this is for the yen, guys. Again, I repeat, you are free to do what you want. All what I'm saying is not an investment advice. It's only for an educational purposes. If you are asking me what you're going to do here, I think I already explained it. Selling dollar yen is quite a nice spot. Of course, not on a day basis, because of course the market can fluctuate on the M50-minute chart, taking out your stop, moving back. You need to be patient. You need to be patient. Hold it like a stock, and not like a short-term trade. That's what I think. Russell, the price of eggs in Japan has gone from 128 to almost 300 yen over the last few years. This clearly explains the hyperinflation that we have in Japan. Okay, so it's also happened in Europe. Okay, actually, where all the housing got to the roof, and I don't know if you remember, but we had all the commodities, soft commodities, also jumped because of the COVID and the lack of export suppliers and stuff like that. So it's a combination of everything. But here it's a nice example that inflation has risen very fast in Japan. And here we're talking about eggs, which is generally a low elasticity product. With generally eggs cannot move 100% in one direction. So again, I like the way that you talk about eggs, because it's not like luxury products or cars, or any other product or services. We are talking about eggs, which is a low elasticity product, which generally it fluctuates only a few percent. Here it's rise, it's almost double, even more than double here in Japan. So again, it shows the inflation that we had. The market, we all also see that the market fluctuate for this inflation, because the yen depreciate during that time. So that's a nice point. Michael, just sorry you gen late. What we're looking at? I'm looking at the dollar yen. It's a long-term perspective. I'm looking for selling the yen. I already explained why. You can maybe go back a little bit before, but you will be able to look the record of the trading room. I'm looking for a short in dollar yen, long-term perspective. You should look at cocoa and coffee futures. It's been a long time I didn't look about commodity prices. I'm only looking about oil and sugar because this is the asset I was trading when I was trading in a fund. But cocoa and coffee, I did not look at the price, but I should look at it. Have you also used double period Bollinger Bands combination? No, I did not use. Before I go to this specific setup, I test 100 of different things. I can tell you that this one is the most suitable for me. Okay, I think it's the most important sentence. You can be able to trade with indicators that you like. I'm good with that, and I'm very happy. I know that here at in the office here at the 5ers, they, when they see Bollinger Bands in a chart, they are looking. They don't like it. Okay, we can say in a few words. I think Bollinger Bands, in my opinion, give me a lot of indication, but others that are managing here the 5ers at the office don't like it at all. Okay, so it depends. But here are the two setup that I like to trade with. So double period Bollinger Bands combination, I did not have a look to before. Let's change the subject, guys, and maybe we can look about indices. I think indices has been very interesting recently. When I was at home and was not trading, I was not trading daily. I was still looking at the price of indices, and I was very impressed. I still expect that by the end of 2023, the market will not break the top, but we will rarely stop moving here. Here it's like a big cup and handle, or inverted head and shoulders. Okay, it's a big one. We have the head here. We have probably a first shoulder here, second shoulder here, which is exactly the same, and then we can actually break a new high. On the fundamental analysis, there is the war that everyone think that it could affect the market. For me, it's bring the opposite impact, which is when you have uncertainty of the market, and when the market push lower, it attracts a lot of investors and a lot of traders to position themselves in the market, and this is what actually happens here. I was looking for the same scenario. Of course, you see on the daily chart that we are in a short downtrend like this, and then the market successfully break, make a retest on that zone, and here the market push higher. It's very interesting. Here, I would not position myself into a long. Okay, you need guys to understand it's not because we make a breakout that we need to be long. I don't like to trade breakout. I'm a trader that like to buy at the best price. So if the price is at the top, I will not buy. I will wait for the market to retrace. Okay. Here we are standing in a strong strong area. So we have the weekly area, we have the daily area, and probably we have here an H1 area. So you have here a lot of resistance zone. The open will be in the next few minutes, I think, or the market already opened because of the time zone. Yeah, I think the market already opened now. Probably there was a news. No, this was last week, 17th. No, I think the market did not open yet. Yeah, the market will open in 5 minutes. Okay, that makes sense. So let's look at the market open. You see here on the M15, very sideways market on the low time frame. I think you guys already. No, Felix, yeah, okay. But here you see on the M5, M15, M30 minutes, very sideways market on the Nasdaq. We are at the top. I would not position myself if I don't have any position. Actually, this is my case. I don't have any daily position here, so I would do nothing. The only thing you need to be careful is sometimes you need to sell to yourself what you should not do, okay? And here, what I will not do is buying the market, okay? Why? Because the market is at the top of the Bollinger Band. As you can see, we are far from the mean, okay? We can move back here. We are at the top of the Bollinger Band, which means we are at the top of the standard deviation. The average, the mean is here, okay? So we already derive from the average price of the Nasdaq. The stochastics is on a overbuy territory. It's already start to cross. Here you have all the elements to open a sell. So if I move back, I told to myself, the only thing I should not do here is opening a buy position, because all the elements are showing me that the market can at least retrace, okay? Should I go for a sell? That's another question. That's another question. The market can break it above. You have a big area here, which is already $400, 400 points, 500 points that the market can go and fluctuate above. Maybe this can be a short scalp, but I won't hold it for a long period of time. Very tricky scenario here on the Nasdaq, for example, and same for the indices. If I look at the H4, we are overextended. We have at least no retracement here, which can be an incentive for me to expect a retracement. Not all the way back, but at least go back to the demand. We have a demand here on the H4, for example. Okay, so that can be a nice point to take some profit. So we get here. We also have a demand here. So yeah, impossible to make a buy here in my case. I'm expecting a rejection. The fact is that can be also a flag. Okay, we are an uptrend, flag, already breakout, and the market can be on the continuation. So we need to be careful. It would not be a A+ setup for me. And generally, indices are just, historically speaking, pushing up. So when you open a sell, you need to be very careful. But that can be a nice spot actually to make something. Okay, let's look at the opening on the market react. Maybe if the market start to open a little bit higher, I could open a sell scalp. So I would prepare a little bit the lot size. I can also open a little bit here. Okay, let's make this session a little bit interesting. Okay, let's try to open a scalp. I will just open here. It's not the best spot to open a sell. Yeah, I would not push myself here. Let's wait for the opening, some volatility, maybe for the market to move back into here. So I put already a sell limit at the top of the London session. If the market continue, I will open another sell at the top of last week, around the top of last week. And my stop loss should be above the high. That can be the only thing. Okay, so let's wait for the market behave. The market pushed. We are not so far from the limits. Yeah, it's already taken. So I have my first entry here, just at the opening. Again, like I said, my stop loss should be above the high. I'm taking here around 1% risk. Yeah, I'm taking around 1% risk for that specific trade. It will be a $200 loss. If the market take the next sell limit, and continue against me. So I'm trading on the good side of the risk management, not risking more than that. Here the market is continually pushing. It's nice. I like to see, like I said, I repeat from what I say just before. I like to see the market going fast in one direction because it attracts the sellers on the opposite way. Okay, so we are going very fast. We are going away from the mean very quickly. So at some point, I'm expecting the market to move back. Okay, like here, moving back, like here, or for example, let me show you here. The market go below the Bollinger Bands, attract some buyers, create a demand, push it back to the mean. Okay, so this is exactly what I want to see here. I don't know if we're going to make it into the next limit, but at least I'm in a position. Everything is sideways on the 30 minutes. That can be interesting to see how the market behave. EuroCAD and PoundCAD trending. Okay, we can look at it. We can look at it. Guys, meanwhile, if you have any questions on the chat, feel free to let me know. I would be happy to answer any questions you may have. Okay, interesting. Yeah, H1. Yeah, it's very, very clear here. Again, I would not be buying here. The market is already overextended. Still, it's a big uptrend, but we are going at the top of the inflection point. Okay, so here I can be looking for a sell, even it's not a A+ signal again because it's a big uptrend. But again, the market can move back to the mean at some point. What's going on in the H4 daily? Yeah, interesting. That's a nice spot, Ishwar. Thank you for mentioning that. Here it can be also a nice setup. I would be saying it could be the same as the dollar yen. It's not the decade opportunity, but it can be a very strong spot for the weekly chart, also the daily chart, to at least moving back. And here, the trend start from the bottom. From here until here, we have no retracement, which is 5% up without any retracement. We have a small retracement here, but it's not enough. So that can be a spot as well to create some sell on the EuroCAD, or the dollar CAD should be the same. But I would be looking for the EuroCAD. Yeah, dollar CAD. Yeah, dollar CAD is yeah, I don't feel comfortable here. You have a lot of we are not at the top. There are still some space to go, but the EuroCAD is looking nice. Okay, so I would be looking for some sell. Let's move back to the Nasdaq to see what's happening here. The market continue to push very strongly into one side. Yeah, let's stay. The limit will stay here. We are not so far from the second limit. Very strong opening on the upside. Very strong. Hi, Tienda. So Ruben tune in a bit late. Do you have fundamental data for your buyers on JPY? Yeah, I had some buyers. The first buyers will be technical, sorry. And again, I try to, it's very difficult to, you need to have a strong analysis on the long term to understand what's going on in Japan. But basically, there was hyperinflation in Japan, big inflation. It's still a very big economy in the world. So I'm expecting the Bank of Japan to align their currency to be a little bit more stronger, because we are in a century low for the Japanese yen. So it's not a tough analysis, but it's more an expectation to see the dollar yen getting a little bit stronger in the next years. Okay, I'm not looking at the daily chart. I'm looking at a weekly or monthly analysis, and the market to retrace from here. So this was for the Japanese yen. Okay, we have the second limit touched here. I will put the stop loss above the high. Yeah, we have here around 1% risk, like I said, which is fair enough. Yes, Russell, that's correct. That's correct. I'm expecting the same move, but even going lower than that, because yeah, let's move back to the dollar yen. There is no dollar yen here in any way. So we had already a first retracement here on 2022. The market moved back again, and here we already see on the daily chart that a momentum on the downside is starting. Okay, so here it looks like a double top on the weekly, and of course the market can go even lower and move back to the 117, but it should be in the next few years. Okay, you need to be very patient for that. And of course you don't need to be leveraged at all. So let's see in the next few months what's happening here. Of course the monthly is at the top as well. Let's move back to the Nasdaq. We had the first stop here. Probably the second stop is here, Steinman limit. And like we see here, it could be also a scalp if you look at the lower time frame. The M1 is almost crossing above the 80 chart, like you can see here. We are at the top of Bollinger Bands. The average is still very low. Okay, so it can be an interesting scalp for the Nasdaq to move down. Again, I'm not looking for a scalp here because there is quite a high volatility recently. I'm more looking to position myself and wait for the market to go to the next big move. So interesting. Again, I like to see the market going fast in one way to wait for the retracement. This is interesting. Japanese yen, yeah, of course. Not Japanese yen, pound yen, yeah. Let's look at it. Yeah, I'm not comfortable as the dollar yen here. Yeah, makes sense. Making a retracement here can be looking for that and moving down, or it can wait for the next supply. We also see that the market is on a downtrend on the pound yen, but again, I would be looking for the dollar yen, especially. interesting. On the H1, the pound yen is reacting here at the hourly support. Also crossing here, oversold already, bottom of Bollinger Band. So you have also a nice point here to go long. Again, if I look at the overall, I would not be looking for a sell in the high time frame. This would be nice for a scalp or for a day trade positioning. It was nice to see that. But that's it. That's it. Let's move back to the Nasdaq. Right, the Forex trade room. Fundamentally, the Bank of Japan is in the preparation stages of shifting their monetary policy to be more restrictive. They are also at the beginning stage of trade negotiations with major companies. Yeah, that's correct. I read that also. But to make it very easy to understand, the Japanese yen should be stronger in the next period, the next years or the next months. They are shifting the policy to gain, and in the long term, this can gain a lot for the yen, and especially when you see that in the last 2 years, the Japanese yen has lost 30% of its value. It's quite a lot. So thank you for that, for bringing the fundamental understanding of what's going on in the yen right now. But also technically, it's looking very good. You are more comfortable when you understand that fundamentally the market can go on your side, but even more when technically, technically the market will go in your favor. And here it's clearly a sell in the yen. So this is why I said it's like a decade opportunity, because the market is at a level that, say, it's at a price that you could not look for decades. Thinking, what's the price of the dollar yen again? Yeah, 100. We are close of 150, which did not happen in 1997 was actually the closest one. We are today in 2023. It already happened one time last year when the market reached, and there was a clear reaction. And today we have another entry point to go. And it's like, if you remember, guys, in oil, when the market reached the bottom, oil touched close to like it crossed below zero in a specific futures contract. But if you look at the CFD environment, oil went to $11 per barrel. Okay, so again, it's a decade opportunity. You won't see oil touching 11 one time a year. Okay, it's one time a decade. You need to understand it's not coming every day, this price. Okay, so when you have a price like this, so you need to click on the button. You need to take action. And that oil trader in the long term are making a lot of money. Yeah, I like the movement here on the Nasdaq. We got a rejection here, especially on my sell limit. Again, here I need to wait. I want to see the market fluctuate in this zone, and then coming back to this demand, I would probably take my first TP here, my second one around that area. But let's see how I can manage it. Maybe I will close before. Maybe I will manage the stop loss. Maybe I will close half. It's only the beginning of my positioning, so let's see how it reacts. Let's get rid of all of that. I think my break-even point is around probably that area. Okay, so this is my break-even point, because I have two and three at the same. It's equidistant. Okay, so Here it's 16%. How many points? 200, 500. Yeah, exactly. Okay, so the purple line is my break-even point. I'll say my average entry. And I should be careful at the closure. I want to see today the market closing below the low of the London session, which is here. No, of the last week. Sorry, of the last week. London session low is here, and yeah, this is the low of last week. Yeah, okay. All right, guys. If you have any questions, anything you would like to know, let me know in the chat before we separate. I would be coming back on a weekly basis from now on. So we're gonna meet each other next week, either Monday or Tuesday as usual. Meanwhile, if you have any question, let me know in the chat, guys. I would be happy to know. If not, we are going to end the trading room as usual. I was very happy to come back. I'm not talking to. It was a long time I did not talk 1 hour in a row about trading and about markets. So yeah. Yeah. Correct, Felix. Bollinger Bands and stochastics works very nice when you see a sideways market. The Forex is known as a big cycle market. So you need to understand like the time lapse of it. Okay. But it's not like having a Bollinger Bands on stocks, okay, which can be very dangerous because stocks can move up 300% in 1 year. So when you look at Forex, which is a cycle period, and when you look at the most stable pair like the Euro USD or the Pound USD, like the major one, you're going to find any day, any month, any week an opportunity looking at the Bollinger Bands because you can understand the sideways market. Sometimes you can also use Bollinger Bands and stochastics on the uptrend market, okay? Because instead of looking the Bollinger Bands as a horizontal, you're going to look at the Bollinger Bands on the uptrend, and it can give even more power to the trend, okay? For example, I think maybe I can, for example, here it's quite difficult because you don't have a lot of rejection. But basically, you have this big uptrend line. So here there is no sideways at all, okay? And you will see that every time here the market got rejected, for example, here we are not so far as well. Here, for example. Okay, so here it's an uptrend, but you can still use the Bollinger Band in your favor and stochastics. Of course, the A+ signals come from having a clear sideways market. Here, I'm asking myself if I should not go sell in the Euro CAD. Here, the market is pushing. I would probably open some sell position. As well, the fact is I have the Nasdaq coming against me right now. Yeah, the stop loss is quite tight, so that's fair enough. Yeah, I'm going to open 0.25 on the Euro CAD. The stop loss should be above the high. Yeah, it should be again 1% trade. I would be looking, like, say, to aggregate my position if the market goes against me to reinforce a little bit. The market can continue to go against me here, but here it's way far overextended for me. I would put another sell at the top, expecting for the market to maybe move back to the mean. But I would be looking for a short rejection like here. That would be enough. All right. Meanwhile, I monitor the volatility activity here on the Nasdaq. I would like to tell you thank you for again coming to the live, coming to the session. I appreciate discussing with you. It's been a long time. Again, we are going to meet you. I'm going to meet you next week. I'm coming back regularly right now. So guys, thank you for joining. I appreciate your time. Thank you for your question. Thank you for the feedback. And yeah, guys, have a nice week. Goodbye, guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.